now, and we are literally at the property where we created our nonprofit, and where essentially we distributed over millions of pounds of fresh produce, especially during the pandemic when so many folks lost their jobs. It's always humbling for me to be here and to look at the community that we built, and the community that we literally were able to have activities for the kids here. So it's always nice to come here. So I wanted to go ahead, check up on you guys, and just kind of give you guys my thoughts. I recently posted a technical analysis graph on my Twitter. You can go ahead and follow me on Twitter at AlStockTrades. You'll see it as an intersection, and I'll explain more regarding what the hell this is. But I wanted to go ahead and make this video, especially here, because I find it interesting because when the pandemic happened, March 3rd, March 15, and March 23rd, these dates are in my mind. Now you have to ask yourself, why are they in my mind? Well, very simply put, March 3rd is when the Federal Reserve went ahead and slashed interest rates by 0.25 to 0.5%. March 15th is when they slashed it to 0% to 0.25%. And then March 23rd is when they went ahead and did unlimited quantitative easing, and when they started printing a whole lot of cash, ladies and gentlemen. So what's interesting here is that March 3rd, when they dropped it by a little bit, the stock market rallied a little bit and it crashed. When they went ahead and dropped interest rates to zero, it started to formulate a bottom. Once they hit the monetary easing of March 23rd, stocks literally shot up. However, it didn't mean that Main Street was actually happy. Here I was standing and I saw lines that extended so far out to the street. People literally in BMWs not being able to afford their car payments because they were living from month to month. We had people from all walks of life come here and ask for food to feed their families. It was complete lockdown, and you guys remember this, just wasn't too long ago. And then I went ahead and I was checking my phone and I was watching all the stocks literally rise. Growth was outperforming value. So what does that mean? It means that Wall Street prioritized companies that burned cash in the obsession of growth, which is why, Amazon grew for what it was, because it burned a lot of cash, but investors didn't care because they wanted them to grow. Okay? And that was the market that we were in back in 2020 and a little bit of 2021. But I was looking at myself and I was like, damn, what in the world has happened here? I have Main Street and the lower to middle class Americans suffering, while we have these billionaires making so much money. So this is when I decided to go in and say, you know what, I'm going to go in and create this platform, AlStockTrades, where we teach intrinsic value calculation, fundamental analysis, and as well as technical analysis. The problem is you cannot be a pure value investor. You have to be a mix of both, value and also growth, because value will protect you during cycles where growth is essentially not. I mean, just look at Kathy Wood's portfolio. You have to have a mixture of both. Warren Buffett with a little bit of oil stocks, which from people at our stock terminal, our oil stocks went really well. They protected us. They allowed us to have money during the 2021 recession, in 2022 for sure, in terms of the tech stock recession. So why am I making this video now, and how does it relate to Clover? Well, very clearly, I went ahead and posted a technical analysis trend line. And if you go ahead and read a book by Weinstein back in the 1980s, he essentially made a simple moving average analysis where he looked at the 200-day simple moving average. You can watch my video, type in AlStockTrades stage analysis, and you'll be able to find that video. Or just Google stage analysis, technical analysis, and you'll be able to understand. What ends up happening is once the price action goes above the 200-day, this is an indication that we're about to go into a uptrend, okay? Now, how many times has Clover failed the 200-day moving average? A lot. But right now, we are getting closer to that 200-day. Now, back in the day, and I wish I had my studio to show you, but I don't, which we'll get to. If you go ahead And if we look at the systems of equations, which basically draws lines out and extends a simple moving average with the same slope and different directions, we can see that the price action could hit above the 200-day moving average all the way from, I would say, July, August to November of 2023. So what does that mean is that we could be in an uptrend in the later half of 2023. However, if we would go back down to 70 cents, then the trend for the 200-day is going to go at February 2024. Regardless of when this happens, we are right in line where the technicals and the fundamentals are literally at a sniper shot distance, where literally, we could be in an uptrend both from the free cash flow perspective and profitability and from the technical analysis in 2024. So that's actually a pretty damn good deal right there, right? Which means that, you know, a lot of the people that have bought right now are going to be sitting really good. Now, for all those people, and I've seen the comments on my YouTube channel, they're saying, well, I'm down a lot. My average price is $9. You know, the thing is, I have to say is, I'm sorry. All of us on the stock terminal, we're going ahead and we're purchasing literally at 70 cents, 75 cents, 80 cents. We are literally buying these dips so that when it goes back to $9, we would literally be 9xing our account. So if you obviously are going to stay at $9 and let's say the stock goes up to $20, $30, okay, well, what is that, 2-3x? Versus right now, imagine that, right? So the people that either have not bought the dip at around $9, that have a price at, that have an average of $9, either they ran out of money, which they should definitely practice not doing that, or they just don't have conviction and due diligence and don't have conviction in the company that they own, right? Because if I have this t-shirt and this t-shirt is $350 and then all of a sudden this t-shirt goes on sale to $100, what am I going to do? Toss out this t-shirt and say this t-shirt has no intrinsic value? It's shit? No, I know this has good value. So I'm going to go ahead and buy more. In fact, I might even buy different colors, right? But people mentally don't know how to do that. And we'll be teaching more about the psychology of money, because there's something basically called reality and the perception of reality. And this goes into George Soros, and I know a lot of people hate George Soros, but this guy is actually really intelligent, okay? There's something called the reality and the perception of reality. And right now, people's perception of reality is indicating that Clover is a shitty stock. But guess what happens when we're in an uptrend, which is soon coming? All of a sudden, the stock is going to rise. It's basically going to go on people's day trading algorithms. Then all the people on the Clover Reddit page of all the 47,000 people are going to awaken, and they're going to say, this is an amazing stock. Andrew Toy is the best. And then guess what's going to happen? The stock is going to be trading past its intrinsic value. You heard that correctly. It's going to be trading past our intrinsic value. So you have two choices: just sell out the intrinsic value, or you can do a trailing stop loss and basically enjoy that growth, and then sell all the people that buy at the top, sell to them, because that's what they do, and then rinse and repeat. The sad part is we want to help retail investors not do that, but the people that found us, well, congratulations. You're about to basically get a taste of what the American dream is like. You're about to get a taste. You know how many millionaires are going to be on our platform? How many millionaires that this stock is going to create? Understand this right now. The future is artificial intelligence, okay? Give me a technology that has been adopted this fast by folks, including the generative pre-transformer, right? The GPT algorithms. Give me something. When the email dawned in literally late 90s to early 2000s, AOL email, everyone and their mama was saying, wow, this is going to change my life. We're experiencing this moment. In fact, AI is even more parabolic. And if Clover can capitalize on this AI movement, utilizing their data sets and taking the Clover Assistant to an ability to democratize it to the branches of rural medicine, family physicians, and primary care doctors around the country, understand that with that and the artificial intelligence tailwind, which is the wind blowing in Clover's behind to the future, along with 10,000 Americans turning 65 years of age and older, it is a tailwind like no other. So this is exactly what we are here for. This is what we created the Al Stock Trades platform. Again, I'm not a full-time YouTuber. This is not my job. This is, maybe in the future it'll be nice to, be creative and create a podcast and bring on folks that are very smart and continue this continued education and trying to find reality and not basically be entrapped by your own perception of reality. But overall, this is, for me, this is a way to give back, a way to be able to show the rest of the world out there how these billionaires and millionaires come into fruition. Okay, if you would have bought Amazon at its lowest, you could have 1,500x'd your money within 23 effing years. This is how the wealthy become wealthy, okay? So let me just read the questions here. Clove to the moon. Glad I bought more while everyone else was selling. Exactly. In fact, if you go to the Clover Health page that I basically created for people that don't want to be censored, if you go ahead and look at that, somebody unfortunately sold at 70-something cents. And then all of a sudden they just said that, damn, dude, I just sold at the bottom. I'm sorry for that guy. I really am. New extrinsic value 9. And no, I didn't say that. Somebody was saying that their average is 9 and they're down a lot of money. Well, how many? You had the opportunity, my friend, and you still do, right? What is the price? If you liked it at 9, what changed, right? So the only thing that's changed is Wall Street now is prioritizing profitability over growth. And guess what happens? Once the interest rates drop in the next 24 months, then Wall Street's going to prioritize growth. And what are you going to do? Hang on to your oil stocks? It's too. I already sold my oil stocks. All right, let's go. Which they're going to go up even more, but still, I rather go on growth. What is the price on the 200-day average? What do we need to break? I would have to look at it again. It's somewhere between like 140-ish, 150-ish, I think, in that region. But understand the way simple moving average works. Every day that passes, the older 200-day, like the 199th day, shuts off and goes off, and it uses the other day, which we know it's a lower price. So every single day, the simple moving average actually decreases, making it possible. Hence why I drew that line. If you go on my Twitter, we go ahead and draw that line. We did a trend line, and I went ahead and flattened the slope, which helped me find the range anywhere between August or January, sorry, the end of July, all the way up until February 2024. So July 2023 and February 2024. But overall, it's really interesting because it falls right in line with the next earnings report, which I believe is somewhere between August, right? So yeah, somebody, co-creator just said, I've averaged down to $2.50 from $14 since the first big boom. You know what I mean? So for that guy who has $9, I'm sorry, but I have no sympathy for you. Okay, I'm sorry. I know that seems very harsh, and it seems very, 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 very harsh. And maybe your financials, you should have never been in the stock market if your financials were never ready to be able to average down. Take this as a learning lesson in the next 10 years, 15 years, when you have another opportunity like this, right? So for overall, we're going to go ahead, and once I'm done with my third year, we're going to go ahead and continue building out the Mastering Stock Market course. Currently, it's in beta access, hence why it's a really good deal. You get lifetime access to the Al Stock Alerts or the stock terminal. And then once we build that out, we're going to include another file for people that are conservative investors, people that just want the 2-3% dividends, because there's going to be people that are going to be making $15-20 million after this, right? Literally $15-20 million. And you have to ask yourself, do you want to continue play the game and continue making money and then wait for another drop in the next 5-10 years, and then taking that 20 million and putting it and becoming 50, 80, 100 million? Or do you want to just go ahead and relax and say, you know what, I'm just going to take a 3% dividends, like Coca-Cola stock, and take a 3%, find a good dividend portfolio, make $400,000 and $500,000 every single year until I die, and then take that $400,000 and $500,000 dividend portfolio and be able to essentially pass it on to your heirs. So we'll talk about that, and seeing what you're comfortable with, right? But that's what I'm thinking about, right? But overall, we're going to be here with you guys. We're going to guide you, and we're going to take this complex information, because I've studied literally all the billionaires that have ever existed, and they're all on our Mastering Stock Market account. You can look at all the billionaires that have been successful: Bill Ackman, Howard Marks, and Warren Buffett, Charles Munger, all of them. And we analyze them, and we see what is their investment strategy and how they invest. And you have in their brain machine you have their CIK numbers, which is directly attached to their Security and Exchange Commission's filing, so you basically see what stocks they buy. So we have it all on lockdown, okay? And we have it all situated. Yeah, so that's all I have for you guys. And just to celebrate that Clover did go over $1, we're going to go ahead and we're going to put a $200 off the Mastering Stock Market course. I'm going to go ahead and create it, and I'll link it down below in the next 15 minutes in the comment sections. So there's that. All right, ladies and gentlemen, I will see you on the next one.